Hello everybody. In this presentation, we will analyze and compare the financial performance of four luxury fashion companies with a focus on capital structure, valuation ratios, and investment strength to identify the most balanced investment choice. Our presentation is structured as follows. We begin with an overview of the luxury fashion segment, then introduce each brand. We continue with financial structure, operational and share price analysis, ratio comparisons, corporate social responsibility, and conclude with our investment decision.
The luxury brand segment offers premium clothing quality, where they offer high-quality clothing pieces made with superior and expensive materials. Exclusivity, available through limited editions with strict availability. Strong brand image where designer collaborations, trademarks deliver status and prestige. Symbolic value and history, where rich cultural identity is followed by trends and storytelling reflecting reputation and emotional sacredity with customers.
Prada is an Italian luxury fashion house founded in 1913 in Milan. It is known for high-quality fashion, leather goods, and footwear, and operates globally under brands such as Prada and Miu Miu. The company targets consumers who value understated luxury, craftsmanship, and long-term brand heritage.
Burberry is an iconic British luxury brand with a strong global presence. It is best known for its heritage, outerwear, and classical design. The brand operates in the global luxury fashion market and competes with companies such as Prada, Moncler, and Brunello Cucinelli.
Moncler was founded in 1952 in France as a mountain gear brand and became a fashion icon in the 1980s. Under CEO Remo Ruffini since 2003, it evolved into a global luxury company and went public in 2013. Today it operates in luxury outwear under Moncler and casual wear through Stone Island, competing with Canada Goose, Prada, Gucci, and Burberry.
Brunello Cucinelli is an Italian luxury fashion brand founded in 1978 in Solomeo, Italy. The company is known for its high-quality craftsmanship, use of premium natural materials, and timeless, elegant design. It operates in the quiet luxury segment, focusing on exclusivity, long-lasting value rather than fast-changing fashion trends. The brand is guided by its philosophy of humanistic capitalism, which places strong emphasis on ethical business practices, employee well-being, and long-term commitment to local community.
Next, we move from brand and strategy to the company's financial position and funding structure. Prada has a very conservative funding structure. The company relies mainly on internal financing, with revenue reserves and capital reserves making up the majority of its funding. Long-term loans represent only a small share, and Prada has no outstanding bonds or preference shares. This low reliance on external debt reduces financial risks and supports long-term stability.
Burberry relies heavily on external financing. Bonds are the largest part of its funding, making up about 39%, followed by long-term loans at 23%. Equity sources like revenue reserves and share premium are smaller compared to other brands. This means Burberry uses more debt, which increases financial risk.
In 2024, Moncler reposts $761.8 million in long-term loans while maintaining a low debt-to-equity ratio, showing conservative financial management. The zero bonds add stability and reflect strong creditworthiness. Equity is mainly supported by high revenue reserves of $2.77 billion, along with share premium, preference shares, and capital reserves, highlighting strong profitability and resilience.
Brunello Cucinelli's funding structure is mainly based on equity and internal reserves, with a relatively moderate level of debt. The company has 154 million euros in long-term loans, but no bonds or preference shares. Its equity base is strong, with 338 million euros in capital reserves and 119 million euros in revenue reserves, while ordinary share capital remains relatively low at 13.6 million. Next, we move from financial structure to how the companies operate and how this is reflected in their share price performance.
Between 2023 and 2025, Prada's share price showed notable volatility driven by both company performance and external shocks. The stock rose during periods of strong financial results, increased demand for quiet luxury, and strong performance from Miu Miu. Major declines followed global inflation, rising interest rates, and weaker luxury demand, specifically in China. Despite these swings, Prada's share price ended close to its initial level, reflecting resilience and continued investor confidence.
Between 2023 and 2024, Burberry's share prices fell significantly. This was mainly caused by the weaker demand for luxury goods, lower consumer spending, and slower recovery in key markets. The price was also affected by uncertainty around the brand's new strategy and the slow impact of management changes. Although there were short-term increases after strategy updates, the share price remains unstable, showing that investors are still unsure about how fast Burberry can recover.
The shares of Moncler dropped during COVID-19 in 2020 but rebounded post Stone Island merger, reaching 69.28. Global inflation, the Russia-Ukraine conflict, and pressures in China caused fluctuations, though financial results remained strong. In 2024, despite geopolitical tensions and IP challenges, shares packed at 70.38, ending the year slightly down, with targets of 70 per share and 1% revenue growth for 2025.
In terms of share price, the company recorded 16.1% growth in 2024, driven by strong demand. However, in 2025, the stock declined due to the Russia-related allegations and broader slowdown in the luxury market. Regarding the market, Brunello Cucinelli operates in the global luxury fashion segment, targeting high net worth individuals and royalty, and competes with brands such as Loro Piana, Zegna, and Kiton.
Here, we will go over the ratio analysis of each company.
Looking at Prada's average ratios from 2020 to 2024, the debt-to-equity ratio of 0.66 shows low leverage and conservative financing. The EV to revenue of 6.24 reflects strong investor confidence in Prada's brand and margins. A price to earnings of 26.4 indicates balanced growth expectations rather than overvaluation, while the price to sales of 3.75 suggests a stable market valuation compared to peers. Overall, these ratios confirm Prada's strong financial discipline and balanced risk profile.
In 2024, Burberry's debt-to-equity ratio of 1.07 shows it uses more debt than most competitors. The EV to revenue ratio of 1.97 is low, meaning the market values the company less compared to its sales. A price to equity of 17.58 suggests lower growth expectations, and the price to sales ratio of 2.65 suggests weaker investor confidence.
Moncler's debt-to-equity ratio remained low at 0.28 in 2024, reflecting financial stability. EV revenue stands at 5.01, while lower PE and PS ratios suggest discounted valuation due to macroeconomic pressure and future growth potentials.
This slide shows Brunello Cucinelli's average ratios from 2020 to 2024. The debt-to-equity ratio of 1.88 shows a moderate use of debt. The EV to revenue ratio and the price to sales ratio are both relatively high, meaning the market values the company strongly compared to its sales. Finally, the PE ratio of 48.91 shows that investors have a high confidence in the company's future growth.
Beyond financial performance, we also consider corporate and social responsibility, as it plays an important role in long-term value across all four companies. Prada's corporate social responsibility focuses on sustainability and people development. The company aims to reduce greenhouse gas emissions through science-based targets and increasingly uses sustainable and recyclable materials in its products and packaging. Prada also promotes high labor standards and invests in employee training, craftsmanship, and equal opportunities, supporting long-term brand value.
Burberry has a strong focus on sustainability. It reduced emissions by almost 94% since 2016 and 2017 and uses 100% renewable electricity. The company also works closely with responsible suppliers and invests in employee and community support.
Moncler focuses on sustainability, circular economy practices, climate action, diversity, and responsible supply chains. These efforts earned top ESG ratings, including AAA from MSCI.
Brunello Cucinelli follows the philosophy of humanistic capitalism, focusing on employee well-being, fair wages, and respectful working conditions. The company also supports the local community by restoring the village of Solomeo, where the company is headquartered. Environmentally, it has set clear emission reduction goals and uses natural, sustainable materials, making responsibility a core part of its brand.
If we make a quick comparison between the companies, we can see that Prada stands out with a balanced financial structure and the highest EV to revenue ratio, showing strong market confidence and brand value, while Moncler has lower debt. Prada combines moderate leverage with solid valuation. Burberry's lower multiples reflect weaker sentiment, and Brunello Cucinelli's high leverage increases risk.
Here we will conclude each brand.
Overall, Prada stands out for its strong global brand and clear luxury positioning. Its stable financial structure supports long-term growth, and despite market and economic volatility, the company has shown resilient performance, making it one of the more balanced brands in our analysis.
In conclusion, Burberry remains a strong and well-known luxury brand, but its higher debt and weaker valuation increase investment risk. Its future performance depends on how successfully it can improve its strategy and respond to changes in luxury demand.
Overall, Moncler combines strong image and financial discipline, brand strength and sustainability. Its low leverage, solid revenues, and premium positioning support long-term growth and continuous leadership in the luxury market.
Brunello Cucinelli is a strong luxury brand built on craftsmanship, exclusivity, and ethical values. Despite short-term challenges, high investor confidence, and its philosophy of humanistic capitalism, position the brand well for long-term growth.
Thank you for your attention.